Okay, hello again, everyone. Welcome, and thank you for joining Dragon Trail International for this month's webinar, which we're holding in partnership with Tourism Economics, an Oxford economics company. Today, we're going to be looking into the future of the Chinese outbound tourism market with a preview of the upcoming Chinese New Year holiday, as well as the long-term forecast from Tourism Economics. I'm Sienna Perulis-Cook. I'm Director of Marketing and Communications at Dragon Trail International. And joining us today as a special guest speaker is Michael Shuri, Head of APAC Tourism Analysis at Tourism Economics. Thank you very much for joining us today, Michael, and we are looking forward to hearing your analysis of the Chinese travel market. First up on the agenda
Thank you. It's a pleasure
today.
to be here.
Oh, sorry. First up on the agenda today, we're going to look at how outbound travel is shaping up for the 2026 Chinese New Year holiday, which officially starts this weekend, though as we'll see, many travelers may have already taken off. Then for a much bigger picture look at the Chinese outbound tourism market, Michael will walk us through how the market has developed over the last over the last decade and a half, rather, and where we're heading in the coming years. The whole presentation should last for around 40 minutes, after which we'll have time to answer a few questions in a live Q&A session. Do feel free to send in questions at any time during the webinar using the Q&A button on your Zoom control panel, and we'll answer questions at the end of the presentation. We will also be sending out a link to a recording of the webinar to all attendees later today, as well as Dragon Trail's presentation slides and a link where you can download Tourism Economics presentation slides. So you will be able to access all of the materials from today's presentation after the session for your own reference, or to share with colleagues who you think might be interested and weren't able to attend a live session. In case you're attending a Dragon Trail webinar for the first time today, I wanted to just briefly introduce who we are and what we do. Dragon Trail International is a marketing solutions company headquartered in Beijing. And since our founding in 2009, we've focused on marketing for Chinese outbound tourism, working with destinations, attractions, hotels, airlines, retailers, and other travel brands and businesses around the world to help them connect to Chinese consumers and the Chinese travel trade. Our services include B2B and B2C digital marketing and content creation, virtual, hybrid, and offline events, marketing and strategy consulting, and marketing representation in China. You can find more information about our services, case studies of our work, and lots of free resources on Chinese travel and marketing trends on our website, www.dragontrail.com. All right, so let's get right into things with the outlook for the Chinese New Year holiday. We've rounded up all of the industry reports we can find, as well as Dragon Trail's own survey data, with insights on the top destinations and biggest trends. Chinese New Year, also known as the Spring Festival, is longer than ever in 2026. Up until last year, the public holiday period was a total of 7 consecutive days off. In 2025, the Chinese government extended this to 8 days, and in 2026, for the first time ever, the public holiday period will be 9 days. These holiday extensions are aimed at boosting consumer spending and definitely provide a benefit to the travel industry, domestically and internationally. Our focus today is on outbound travel outside of mainland China, and here we are expecting growth. As of mid-January, flight analytics company Flightmaster said that outbound flight bookings were up by 63% compared to 2025. One of China's leading travel agencies, Utour, said that long-haul outbound bookings were up by 60% year on year, with short-haul outbound bookings up by 160%. Now, where are Chinese outbound travelers going this Chinese New Year? These are all the destination lists that are released so far by Chinese OTAs and travel websites, which give us some idea of the destination trends. There are a couple of things that I want to note before going through these lists. First, although there is a lot of crossover, each of the lists is different. Part of this difference is because the OTAs here are catering to slightly different clientele. So, for example, Tunio specializes in group travel with 51% of its short haul outbound bookings for group travel and 97% of its long haul outbound bookings for group travel. Meanwhile, we have Mafengwo, which is a travel website that caters to independent travelers. So very different segments of the market there. Another caveat is that these lists, and with any other preview data that we're looking at, they definitely do provide a good indication of what's going to happen during the holiday, but the Chinese outbound travel market tends to be very spontaneous, and most bookings are actually going to be happening within a few weeks of departure. So I did include the date that all of these lists came out, so you have an idea of kind of how fresh the information is. So first of all, it looks like Thailand might finally reclaim its #1 ranking for Chinese outbound tourism destination. It's featured at or near the top of every list here. 4 out of Tunio's top 10 destinations for independent travel packages this Chinese New Year were in Thailand, including relaxing beach destinations, Phuket, and Koh Samui, underscoring further Thailand's popularity. Thailand's biggest competition seems to be South Korea, which has flight capacity almost on par with Thailand, as we'll see in a few slides' time. South Korea will also be the top international destination for cruises departing China, and cruise travel has been growing as a Chinese New Year trend over the last couple of years, so that's why I mention it specifically here. Malaysia has been a big post-pandemic winner for Chinese outbound tourism thanks to its visa-free policy, and it's also a top destination for Chinese New Year bookings so far. We also see Singapore and Indonesia on many of these lists, as well as a few mentions of Vietnam. While many of these lists will be focusing only on international tourism, and so they might not include Hong Kong in their rankings, Hong Kong does still come up on Tongcheng's and Flightmaster's lists. Looking at long-haul destinations, we see strong performance for Australia and New Zealand. Chunar reported in December that bookings for New Zealand had doubled year on year, making it the fastest growing Chinese New Year destination. Lastly, Italy, host of the 2026 Winter Olympics, also made it onto both Tunio's and Mafengwo's lists. Notably absent from any of these lists is Japan, which has been the leading international destination for Chinese New Year and other holiday travel for many years. Following a diplomatic incident in November, around half of the flights to Japan have been canceled, with group tours canceled also and cruise itineraries rerouted. Chinese tourism to Japan in December was more than 45% less than 1 year previous. This development looks like it will bring more Chinese tourists to Thailand, South Korea, Singapore, and even to long-haul destinations, and it is a major shakeup in the market. For those of you who didn't attend Dragon Trail's January webinar and might not have had a chance yet to see the results of our Chinese outbound travel trade survey, I also wanted to share some of the data that we gathered from Chinese travel agents about Spring Festival travel, destinations, and other sales trends. Our survey was conducted in the last week of December, and we asked travel agents to write in which destinations were the most popular so far, so they could write in anything and also list multiple destinations. The list of destinations they gave us is very diverse, with a total of 47 countries and 15 world regions listed. 61% of the destinations mentioned were in Asia, with another 26% in Europe. In terms of countries, South Korea, Thailand, and Singapore were the top 3, but Japan still did feature prominently in 4th place. So we don't expect that nobody will be going there for Chinese New Year, despite the travel warnings and canceled flights. Newly visa-free Russia was 6th on the list, and we also see the popularity of Nordic countries, with Norway and Iceland on there too. Norway was Chunar's second fastest growing Chinese New Year destination in December after New Zealand. And December report also noted a surge in searches for both Norway and New Zealand for the Chinese New Year holiday period. Here is some more interesting destination-related data, which came out recently from Flightmaster, looking at China's international flight capacity. Just 4% behind pre-pandemic levels, Southeast Asia accounts for 49% of the total international flights from China. Flights to Europe, West Asia, Central Asia, and Africa have all recovered and exceeded 2019 volumes, while North America still lags significantly. Interestingly, flights to East Asian destinations are 22% behind 2019 levels. And as we'll see on the next slide, this is largely because of the Japan flight cancellations. Actually, the overall international flight recovery rate at 90% this Chinese New Year is almost the same as it was last Chinese New Year. And I think without those Japan flight cancellations, we would have seen much more growth. So here, looking at the top countries for international flights, we see that Japan is in fourth place at 43% below pre-pandemic levels. So to compare, in late October, before the travel warning, Japan was in first place position with nearly 1,200 China flights every week, reaching 85% of pre-pandemic flight capacity. So there has been a big drop since then. Apart from Japan, we see South Korea and Australia nearly fully recovered with flight capacity, and destinations like Malaysia, Vietnam, Singapore, Russia, and the UAE are all well above 2019 levels. Moving on from destinations, I'd like to highlight a few trends in travel behavior and demographics. Chinese outbound trips have been getting longer. This was a major trend in 2025, and the extra long public holiday is encouraging this further. Tunio tracked the average length of Chinese New Year travel packages since 2019, and we can see that 2026 is the longest yet, with an average of 5.9 days for all travelers, including domestic and outbound. Short-haul outbound trips averaged 5.7 days, similar to long-distance domestic, while long-haul outbound trips averaged 9.8 days. Their report noted that travelers to Europe were using annual leave to extend their holiday periods for up to 15 days. Cunar's December report also noted that flight prices were starting to increase from the 9th of February, indicating that demand was picking up for early departures before the public holiday officially begins on the 15th. It shouldn't come as any surprise that family travelers are a key demographic at Chinese New Year. It's a holiday for families to spend together, and school holidays at this time of year are usually at least 1 month. So it's a good time of year for parents to travel with their children. 55% of the travel agents surveyed by Dragon Trail said that families with children were the leading market profile for Chinese New Year travel sales. Ctrip's Chinese New Year report said that more than half of domestic bookings as of the 15th of January were for family travelers. And in terms of outbound travel, the most popular destinations on Ctrip for families traveling with young children aged 12 and under included Singapore, Bangkok, and Kuala Lumpur. For families with older middle school age children, the top destinations were Sydney, Auckland, Seoul, and Hong Kong. If you want to learn more about the trends in destination choice and travel type, depending on the age group of children and how the motivations for outbound travel change as children get older, I highly recommend checking out a recording of a webinar we did on the family travel market in November 2024. The recording is still available on the Dragon Trail website, and I think the content is still highly relevant. The next trend is one that we've been seeing for many years from the Chinese outbound travel market, but with some fresh updates and destinations. And this is the significant impact of visa waivers and other visa-friendly policies on Chinese destination choice. Russia became visa-free for Chinese tourists in December, and as you'll remember, it ranked 6th in Dragon Trail's travel agent survey. Tongcheng reported that flight and hotel bookings for Chinese New Year were up by 113% year on year. Turkey became visa-free at the beginning of January, and Tongcheng reported an even bigger 248% increase in bookings there. It was also the number 4 destination on Mafanghuo's Chinese New Year destination list. The Philippines, rather surprisingly, went visa-free in the middle of January and also made it onto Mafanghuo's top destination list. Their report said that interest in the Philippines had increased by nearly 200% in the week previous. Some visa-free travel trends are more ongoing. Tongcheng noted the continued growth in travel to the Middle East, particularly to the UAE and Oman, which are both visa-free, as well as to Saudi Arabia, which offers an e-visa. Tunio's top 10 fastest growing destination list featured visa-free Uzbekistan and Kazakhstan in first and second places, as well as visa-free Georgia in seventh place. The final trend that came up in a number of reports and our own research is another long-term trend, and this is towards groups, private groups, and customized travel. UTOR said that small groups of 20 people or fewer accounted for half of their bookings, with groups of around 6 people traveling to Southeast Asian destinations the most popular type of product. Tunio's report also emphasized the rising demand for small groups, customized tours, in-depth travel products, themed travel products, and private group products such as chauffeur services. More than half of travel agents in our own survey said that small group tours and private groups were the best-selling Chinese New Year product type, far above traditional group tours with just 27%. So that's what we can expect over the next few weeks. And now let's take a much longer term look at the market with Michael Shuri from Tourism Economics.
Thank you very much, Sienna. Lots of interesting insights there, and a lot of them that reinforce rather than contrast my understanding, which is always nice to know. Okay, just sharing my screen. Okay, just confirming that you can see that introductory slide. Yep, excellent. Thank you very much. Okay, I'll just get myself sorted. It'll just be 2 minutes, or rather 2 seconds. Be concerned if it took me 2 minutes, I tell you that. Okay, so thank you everyone for joining. It's a pleasure to be here. So as Sienna said, I'll be sharing the outlook for Chinese outbound travel over the coming few years. So what you can see on the screen on this introductory slide is a QR code. If you'd like a copy of this slide deck and you have your phone handy, please go ahead and scan this QR code. But I'll be showing this several more times throughout the presentation, so don't panic if you don't get it just now. It's on several more slides. Okay, so for those of you who don't know, tourism economics is part of the global economic consulting firm Oxford Economics. And at Tourism Economics, we specialize in insights on the travel and tourism industry. So we draw on the macroeconomic expertise of the parent company, Oxford Economics, and we go ahead and we produce forecasts for travel flows between 185 countries, more than 300 cities, and for thousands of air routes. As well as this, we provide insights on the cruise industry and also do bespoke consulting work such as economic impact analysis. And the projections and the forecasts I'll be sharing with you today, these are our own forecasts for travel flows that we produce for our clients. Okay, so I'm going to start with a look at the global economic context that underpins the travel environment before I look more specifically at Chinese outbound travel. So uncertainty in the global economy and among consumers is particularly high. So a key driver of this has been US trade policy. In other words, the imposing of tariffs on the imported goods and services to the US from various trading partners. So this graph is showing a publicly available index that tracks uncertainty surrounding US trade policy over time. And you can see that in early 2025, this index hit levels that far surpassed previous peaks, which was driven by a lack of clarity over the timing, the application, and the magnitude of US tariffs. While the index has since moderated somewhat, the uncertainty still remains elevated and well above previous historic records. Now, alongside this, global economic growth has also been weakening. So this graph is showing annual GDP growth for selected years from 2024 through to 2030. Now, considering the uncertainty that's been present over the past year, growth is actually still relatively robust. And that's partly because we've seen a lot of risks which would have been, calamitous if followed through, actually, they've actually moderated, or there's been a walking back from the brink. This is partly what some people call the taco trade, which stands for Trump always chickens out. Not my term, something that someone else has said. But in other words, the worst that was expected or feared has not actually played out. So globally, growth is still expected to fall slightly this year and through to 2030 relative to what was the case last year, being driven largely by a combination of the US and, of interest, of course, China. There's been improvement in Europe and the UK. But when it comes to China, I want to make the point that the moderation in growth, despite the moderation in growth, it's still quite high compared to other large economies. And this moderation, as I'll explain later, is normal as an economy matures. So overall, the weakened economic outlook is not as bad as first feared, but we do still need to be aware of the risks and how impacts may flow through to travel demand. And on that topic, here are a few key channels through which travel demand is impacted via uncertainty in US trade policy and GDP. So weaker trade activity reduces economic growth overall. That's basically what I was showing on the previous slide, and also what you can see here on this graph. The graph's the same. Weaker economies lead to slower growth in household income, and this means that travel becomes less affordable for households. Beyond affordability, though, there's also sentiment impacts. So sentiment among consumers and potential travellers is weakened by uncertainty. So people are less willing to engage in travel due to uncertainty about their future income and also their perceptions about safety and security. So in other words, people choose to travel less, aside from whether they can afford travel or not. And finally, the fourth channel through which US trade uncertainty impacts travel are actual travel bans. So these have been limited so far, and it's been very much a US-centric phenomenon. So it's not widespread, but this too doesn't help broader traveller sentiment when we see these things being put in place. Let's look at travel specifically. So I'm going to talk about the global outlook first before looking at Chinese outbound travel specifically. So global travel demand remains resilient, even in the face of the uncertainty I've mentioned, because consumers are continuing to prioritise travel. And we ultimately expect this resilience and this prioritisation to continue. So this graph is showing our projections for domestic and inbound travel globally relative to 2025, so relative to last year. So globally, international travel volumes fully recovered from the pandemic last year, and travel demand fundamentally remains robust. So what you can see here is there's going to be solid growth in travel activity worldwide in the coming 5 to 10 years, both for domestic and for inbound travel. In the next decade, we project annual domestic tourism volumes will increase 54%. But for international tourism, this growth is even stronger, with a gain of more than 60% by 2035. And as you will have seen, inbound or international travel is going to grow at a faster rate than domestic travel. This continues a long-run trend that we've seen, and as global incomes rise and connectivity improves. So we project there'll be more than 2 billion overnight trips taken by international tourists in 2030, compared to 1.5 billion last year. And this will increase further by 2035. Spending in destinations by these visitors will also increase to more than $2.5 trillion by 2030. Now, I should note that domestic travel will remain the larger tourism segment globally and also for several countries. So globally, domestic tourism will account for around 2/3 of visitor nights throughout the coming decade. But international travel is growing more quickly and will continue to grow more quickly. So there are certainly some risks to this outlook, including amid the economic and geopolitical uncertainty that I've mentioned. I'll talk through these a little bit later maybe, but ultimately I want to make the point that travel demand remains robust and consumers continue to prioritise it in their spending decisions. Right, let's look at Chinese outbound travel specifically now. So I'm going to start by setting the scene by showing just how important Chinese outbound travel has been for global destinations, and ultimately why the recovery in this travel is so important to think about. I'm sure most of you already know this, but I'm going to show it to you visually anyway. So this graph is showing the world's 5 largest outbound markets in terms of visitors. In other words, the largest country sources of international visitors to all destinations. And it's showing their share of global international visits. So in 2019, China provided the 3rd largest number of outbound visitors, 7% of the global total. But at this point, I need to make an important distinction. So the data I'm showing here is for overnight visits from China to other countries. So this metric does not include same-day visits where the traveller doesn't stay a night in the destination. So I understand this is different to some other metrics that you may be more familiar with, including the total outbound trips that are published by some official Chinese government sources. But I'm going to explain the differences now briefly. So the data I'm showing here is overnight visits from China or other countries that's actually collated using arrivals to destinations instead of the departure data from the source country. And this is fundamentally what we use most commonly. And we do this for a few reasons. So firstly, arrivals data tends to be more reliable than outbound data. That's what we see across many countries, certainly not just China. And not just that, those arrivals measures tend to be more consistent across different countries globally, so it's easier to compare across countries. So sometimes the departure data has different things in there, like same-day visits, but other countries do not. It's also the case that generally those in the industry prefer overnight visits, or they find that data more meaningful, because these visitors tend to add more to the local economy. So I'm just explaining here the metric that we're using and why it may be different to something you may have seen before. These are overnight visits. So on this metric, China was the third largest source of outbound visitors in 2019. But probably more important than the size of this share is the increase over time. So most of other large markets, which you can see here, had fairly stable shares of global outbound travel throughout the 2010s. But China saw a rapid increase. So it grew much more quickly than other large markets, and it gained prominence as a source of international visitors. So you can really see that sharp increase in the red line. It really stands out. And China's prominence as an outbound market is even greater in terms of spending by international tourists instead of visits. And that's because Chinese visitors are typically quite high value, so they tend to spend a lot on average. So China actually became the largest source of international tourism spending in the mid-2010s. And in 2019, it accounted for 11% of the global total, compared to 7% of the global total for visits. And unsurprisingly, China was also the largest driver in growth for international tourism in the 2010s. So this graph is showing the contribution of different outbound markets to the increase in international overnight visitors across the world in that decade, 2010 to 2019. So China was by far the largest, driving 14% of the increase. And it was a long way ahead of the next biggest drivers, which were the US, Germany, the UK, and South Korea. And again, this impact from Chinese outbound travel was even larger in terms of spending. So alongside contributing 14% of the growth in global visits over the decade, China accounted for 22% of the increase in international travel spending. So 1/5 of the growth in international travel spend from 2010 to 2019 was accounted for by Chinese visitors. So these graphs and metrics show, I think, clearly just how important Chinese outbound travel has been for global destinations. But this importance has varied for different destination regions as well. So this graph is showing the distribution of Chinese visitors. So to which regions do they travel over 2015 to 2019? And this excludes the special administrative regions of Hong Kong and Macau. So almost 40% of Chinese outbound visits went to destinations in Southeast Asia, and 27% of those are to those in Northeast Asia, while 20% went to Europe. So the vast majority went to destinations elsewhere in the APAC region, which is consistent with what Sienna was showing earlier when looking at the near-term forecast. And this has also continued into 2025, even though Chinese outbound volumes have not fully recovered their pre-pandemic levels. In 2025, a slightly larger share went to Northeast Asia and the Middle East compared to prior to the pandemic, and a slightly lower share to some others. But overall, the pattern is fairly similar. Please ignore the yellow on that headline. I should have taken that out, so excuse me for that. But we can look at this also from the destination perspective. So how important are Chinese travellers as a source for different destination regions? Or how reliant are these regions on Chinese outbound travel? So APAC is the top or the most reliant. So 1/4 of inbound visits to APAC destinations in 2019 came from Chinese travellers. That's much higher than for any other region. But I think the important thing to take away from this graph is that all regions became more reliant on Chinese travellers between 2010 and 2019. In other words, the blue bars are much larger than the grey bars. So again, that shows how important Chinese outbound travelers have been for growth globally and for all regions. Okay, I've shared some visuals and some metrics about how important China is as an outbound market. Let's look at how recovery in that travel is progressing. So we project that China will recover pre-pandemic outbound volumes at a total level around 2027. So this graph is showing outbound travel from China compared to 2019 in the dark blue bars, and that from all other source markets combined in the grey bars. So currently we're expecting volumes in China for Chinese outbound visits to be around 10% lower this year than they were in 2019, and that full recovery happening in 2027. So last year, Chinese outbound travel recovered to around 25% lower than the same period in 2019. It wasn't a full recovery, but it was a notable improvement from 2024. Some destinations, such as Japan, Malaysia, and Singapore, have seen quite strong recoveries, which is something that Sienna mentioned earlier as well. But elsewhere, some destinations in Southeast Asia, had seen a weaker recovery last year. So too did Europe and the Americas. Now, this overall outlook, though, I want to point out that I would say this is probably optimistic at this point. So there's definitely downside risks to this baseline projection. I say this because the economic outlook in China has weakened a bit over time. A lot of this in the past year or two has been driven by uncertainty around US tariffs and the flow-on impacts for the Chinese economy. And that in turn, as I said earlier, impacts consumer and traveller sentiment. And we do know that Chinese travellers are particularly sensitive to concerns about safety and security. So, for instance, there were some key events and issues in Southeast Asian destinations last year that led to some deterioration in sentiment among Chinese travellers, and that in turn led to weaker volumes of Chinese visitors for those destinations. But while I've said that the economic outlook has weakened for China, it's also important to acknowledge that the Chinese economy is maturing over time. So the extraordinary growth in GDP that was seen in the 2010s, that was never going to continue forever. It's just not possible. And China is still going to outpace advanced markets and the global average for GDP growth through to the end of the decade and probably beyond too. So this growth in the Chinese economy and household income and things like that, it will be slower than maybe a lot of people have become accustomed to, but it's still quite strong if you put it into context. And it will continue to support growth in outbound travel demand. Okay, part of the reason why I say that I think our baseline projection for a 2027 recovery globally is optimistic is that we have so far been a little bit disappointed in the recovery, or in other words, we've been surprised to the downside. So over the past year, we've downgraded our near-term outlook for Chinese outbound travel. So what you can see here, our current forecasts, which we finalised in December, are in the dark blue bars. And these are volumes relative to 2019. Our forecasts from the end of 2024, so 1 year earlier, are in the light blue bars. So a bit over a year ago, we were expecting a stronger recovery than we do at the moment. So in December 2024, our expectations were for a full recovery of Chinese outbound volumes in 2026. We've now changed that to 2027, or we did throughout the year. But I should point out these downgrades are mostly a near-term thing, so for 2026 and 2027. If you look at the longer run, so 2030 and even beyond, which I haven't shown here, there's been smaller revisions. And that's because ultimately the economic and demographic fundamentals support the recovery and the solid growth in Chinese outbound travel. As more data comes in, we will respond accordingly and either downgrade or upgrade, but this is our view as of the end of last year. And it's also our expectation that by 2029, so by late in the decade, Chinese outbound travel will have seen stronger growth compared to prior to the pandemic than other global markets overall. So at the moment, annual growth is already quicker for China than elsewhere, but by 2029, the growth in Chinese outbound relative to 2019 will be larger than for all other source markets combined. So this is just another way of emphasizing that long-run outlook is solid. And alongside this, we can expect China to continue to gain prominence as a global outbound market. So I showed the first half of this graph earlier, which is China's share of global outbound visits over time. So we project that China will regain, but now, I've added on our forecasts from last year, which are estimates or finalised data as much as is available, through to 2035. So we project that China will regain its 2019 share of global outbound visits in 2029 and keep growing beyond that. And ultimately, we expect China to become the second largest source of international visitors early in the next decade, when it will overtake Germany. And by 2035, China will provide around the same number of outbound visitors as the US. So by 2028, we expect China as well to regain its position as the top source of spending by international visitors. And China will also continue to be the largest driver of growth in global travel. So between 2019 and 2030, China will contribute 8% of the increase in global outbound visits and 11% of the increase in spend. Now, this contribution will be smaller than the decade before the pandemic. That's because, as I mentioned with the Chinese economy, the Chinese travel market is maturing. It will still be very large and provide significant increases in volumes, but at a slower rate of growth. So those gains that were achieved in the 2010s won't happen, but there will still be large gains nevertheless. But now I'm going to talk a bit about what's supporting the outlook for Chinese outbound growth. And one key factor is an increase in the number of Chinese households that engage in travel. So this reflects a combination of demographic factors and economic factors. So this graph here is showing our estimates for the number of new travel households in each country that will be added between 2025 and 2035. In other words, how many households will see an increase in their income to a level that enables them to afford domestic or international travel. And China will provide the largest increase in this number of households, followed closely by India. So China alone will see more than 20 million more households that can afford to travel internationally, in addition to a much larger number that can now afford to travel domestically. Now, these 20 million international households that will be able to afford these 20 million households that will be able to afford international travel, they won't necessarily engage in that travel, but they will have the economic potential to do so, or the ability to do so. So that's one of the fundamental factors that supports the outlook for growth in Chinese outbound travel. Another factor is something that Sienna touched on earlier, and that is accessibility, connectivity when it comes to air routes, and also in terms of visa access. So visa-free travel is a very important factor in facilitating growth in cross-border travel. So China obviously has entered into several new bilateral visa-free or visa easing arrangements with various countries, and that will make travel from China to these destinations much easier. Now, while this will impact destination choice, it will ultimately support the volumes of Chinese outbound travel overall as well. Because as more and more countries become easier for Chinese residents to access, you can expect more households to engage in travel as well. So that's another key factor that will support growth in Chinese outbound travel going forward. So I've talked about the overall outlook globally. What does it mean? What about some specific destination regions and countries? So far, the Middle East has seen the strongest rebound in Chinese visits of any region. That's been supported by improved air connectivity, stronger investment links with China, Chinese traveller preferences for luxury experiences, which are typically provided in the Middle East, and also the easing of some visa restrictions in some destinations, as I mentioned. APAC has seen a solid rebound. This is supported by proximity and also the existing relationships between these destinations and the Chinese market. And Europe as well is expected to see a recovery in Chinese visits this year or next year. Not as quick as the others, but still solid. North America is a standout for the wrong reasons. The outlook for this Chinese travel to North America is weak. This is driven entirely by the US. Now, it's not shown on this graph, but by 2030, we ultimately expect that APAC, Europe, and Latin America will all see volumes of Chinese visitors about 50% above 2019 levels. So that's quite strong growth. The Middle East will see an even stronger increase. So basically a doubling of volumes of Chinese visitors in 2030 relative to 2019. Okay, now I'll look at some specific country destinations. So this graph shows 20 of the top destinations for Chinese outbound visits in 2019. So the most common places that Chinese visitors go. And it's excluding the special administrative regions. So destinations in Asia Pacific are coloured light blue. Those in other regions, so longer haul travel, are covered dark blue. So you can see that APAC destinations make up the bulk of the list. Now, in 2019, Thailand was the largest destination for Chinese travellers. This was followed by Japan, South Korea, Vietnam, Malaysia, and the US. Now let's look at the rebound in growth in annual terms to these different destinations. So far, or as of 2025, Malaysia had seen the strongest rebound, supported by improved air connectivity, streamlined visa processing, and also some quite targeted marketing by the Malaysian authorities. Vietnam and Japan have also seen fairly robust recoveries, as have Singapore and also the UAE. Now, while the outlook for Thailand in the near term looks quite strong based on the information CNY has shared already, as of last year, Thailand had actually seen quite a weak recovery in Chinese visits. So we published some research on this, and essentially there was some negative incidents and news in Thailand that led to quite a severe weakening of Chinese demand and a deterrence essentially. And visits in 2025 actually fell to Thailand relative to 2024. And that's had a big impact on Thailand as a destination overall. And there were also some sentiment impacts and some security concerns and tensions that impacted the recovery for some other Southeast Asian destinations and also Taiwan as well. But let's look forward now. Let's look forward to 2030. So I'm showing volumes here for Chinese visits relative to 2019. And again, these are our baseline forecasts. So Chinese outbound visits to all of these destinations, or almost all of them, will be much higher than in 2019. So with these forecasts, Japan and Singapore are expected to see the strongest growth. Thailand is expected to bounce back from the weakness that we saw last year, which is consistent with long-run Chinese demand to go to Thailand. And South Korea, Australia, and Vietnam also have fairly strong growth projected. We don't expect the US will see a recovery by 2030. So Chinese visits to the US we expect to be smaller in 2030 than they were in 2019. We also have a fairly weak outlook for Taiwan as well. But I'd like to talk about Japan for a minute. So this baseline forecast, which we published in December, is definitely optimistic at the moment. And this actually represents a downgrade from the previous forecast we had because the Chinese visits to Japan were just so strong in recent years. Now, the downgrade and the uncertainty around this is because of the rise of tensions between China and Japan and a deterrence for Chinese visitors to travel there, as was mentioned by Sienna earlier. Now, I want to point out this is something that we're monitoring, and we will be revising this forecast as needed when we update in the next few weeks. But ultimately, when we updated this in December, there was not a lot of actual concrete data available, including through official sources. So basically, we downgraded this. We wanted to wait to see some more concrete evidence before quantifying any impact further. So we do expect to downgrade this further, but I would like to point out two things. Number one, this is a 2030 outlook. So any downgrades are likely to be larger in the near term than they are 5 years from now. So we'd still probably downgrade this 5-year outlook, but we would also expect tensions would not last 5 years. But we will see when we assess a bit closer to the time. Secondly, we don't expect there to be an impact from these tensions among Chinese visitors traveling to Japan on Chinese outbound travel overall. So we don't expect there to be a significant impact on overall Chinese outbound travel. That's because we would expect these travelers would substitute Japan for other destinations, either in Asia, including Northeast Asia, so such as South Korea, Southeast Asia, or even longer haul. So overall, I want to make the point that this is a little bit too strong at the moment, but watch this space and we will review it in depth in the coming few weeks. Okay, as I said earlier, APAC is the region most reliant on China as a source market. This reliance has fallen slightly since 2019, but will return to longer run pattern in coming years. And in fact, all regions except for the Americas have become more reliant or as reliant on China to provide travellers as they were prior to the pandemic. So among the largest destinations for Chinese travellers, Cambodia, South Korea, Vietnam, Japan and Thailand are the most reliant on Chinese outbound travel, or the most exposed to the Chinese market. So these are the destinations who most eagerly await increases in Chinese outbound demand. Outside of APAC, Switzerland, the UAE and Russia are those destinations most reliant on Chinese visitors. And the importance of China to many of these destinations is underscored by just how much growth we expect Chinese visitors to drive for inbound tourism to these countries. So this graph is showing China's contribution to the growth in international visits to these destinations in the next 5 years. So China's share of the increase in arrivals in the next 5 years to these countries. So again, we expect China to play the biggest role for APAC destinations. That Japan number is probably too strong, as I said earlier. But aside from Japan, South Korea and Thailand will see a big role for China driving growth in visits going forward. And even outside of APAC, China is expected to drive 20% of the growth in visits to Switzerland and the Czech Republic, and 10% of the growth in visits to Austria. Okay, to finish off, I'm going to switch from looking at Chinese outbound visits in volumes to a few other metrics. So one of the reasons that I'm looking, or one of the reasons, as I mentioned earlier, that Chinese outbound travel is so important is that Chinese travelers are typically high value. In other words, on average, they spend a lot per visit or per night. So that adds a lot to local economies and to the tourism industry in destinations. So this graph shows on average how much an outbound traveler spends per night when they travel internationally. And these are a selection of the largest outbound markets in the world. So Chinese visitors by far spend the most on average, and that's a clear step above all other markets. This was the case in 2024 and 2025, and we expect that to continue through to 2030. But the margin of average spending between China and other markets is falling over time, and we expect this to continue. So we do expect Chinese visitors to remain relatively high spending, but by less of an extent than was the case in the 2010s. So that's partly because the segments of the Chinese population that are engaging in travel are changing. And as a result, the typical preferences for Chinese travelers are changing as well. So the average Chinese traveler is getting younger, and these younger travelers are engaging more in independent travel, longer trips, and different types of products and experiences than perhaps the generation did in the 2010s that made up the bulk of travel then. So that means that ultimately destinations need to be attuned to these different preferences and adapt to them as well. So that's important to attract visitors in what is an increasingly competitive tourism environment. And now I just want to briefly talk about the potential for growth in Chinese outbound travel beyond the forecasts I've shown today. So past 2030, past 2035, looking decades into the future. So I want to point out that the potential in the Chinese market is significant because only a fraction of the Chinese population currently engage in outbound or international travel. So while outbound travel among Chinese residents is growing, their propensity to travel is still relatively low. So that's what this graph is showing. It's showing the number of outbound nights per capita in the dark blue bars. So on average, the number of international or outbound nights traveled per person for a few different countries. And this is showing what we expect in 2030. So you see that China's propensity to travel internationally is much lower than large developed economies like Japan and Australia. If this propensity increases among the Chinese population just modestly, you'd see a huge increase in Chinese outbound volumes. And we do expect this to happen over time as economic development continues in China and household incomes rise. So in other words, as more traveling households are added, which is something I showed earlier, but this potential exists well beyond the next decade as well. And just to reinforce that point about potential is to show how small outbound travel is among the Chinese population relative to domestic. So outbound travel will account for only 15% of nights traveled by the Chinese population in 2030 and 17% by 2035. So the vast majority of travel amongst the Chinese population will still be domestic. And something else we've observed over time is that economic development progresses, domestic travel tends to be converted into outbound or international travel. So we can expect these dark blue bars here to keep increasing through to the 2040s and beyond. And just to wrap up, I'd like to emphasize what I think are the key points I'd like you to take away from today. So the Chinese outbound recovery is progressing, slower than initially hoped, being weighed down by some uncertainty and some economic factors. But demand fundamentally remains solid, and we expect a full recovery around 2027. Risks around this are skewed to the downside, so it's maybe slightly optimistic. That demand is fundamentally a solid factor. So, and alongside this, we expect China to continue to be a key driver of global travel growth. Less so than the 2010s as the market matures, but still a key driver nonetheless. APAC destinations are most exposed to the Chinese market, so they are the ones who will benefit the most from that growth. And ultimately, there's significant long run potential for Chinese outbound travel beyond what I've shown you today, so beyond the next few years. Alongside that, though, there are also changing tastes and preferences, which is something that businesses and destinations must, of course, be aware of. Thank you very much for your time and looking forward to a little bit of Q&A now.
Hi, Michael. Thank you so much for that really interesting presentation. I'm just going to see if I can get my screen back up just before we move on to Q&A, and also give you maybe a minute to review some of the questions that are in the Q&A box. I just wanted to mention that you will be able to find Dragon Trail's Chinese Outbound Travel Trade Survey report to view and download for free on the Dragon Trail website in the resources section. There you'll also be able to find all of our past consumer and travel trade reports, as well as other reports translated from other industry sources, and a lot of the information from this webinar too in written format. As well as all of our past webinar videos. So you can check that out later if you're looking for more information. And now we are ready to move on to the Q&A. One question I just wanted to answer first was about downloading the presentation materials. I will be emailing everybody later today with a link to download Dragon Trail's presentation. And then there's I'll include the QR code where you can download Tourism Economics presentation. So you will be able to get all the slides, because I realize there's a lot of data from myself, but especially from Michael, that it's good to look at maybe at a slower pace later on. And then in terms of the Q&A questions, there were a few questions about Chinese tourism to Thailand. And so I thought that I could give some answers to that, and then Michael, you could jump in with what you might like to answer. So one of the questions, it was about kind of outlook for Thailand, and then what thoughts and suggestions about Thailand adapting its offerings to the Chinese travel market. So yes, I think we are in the short term looking at a quite promising Chinese New Year for Thailand. Obviously, there's been a big benefit from Chinese tourism being redirected from Japan, and so people are choosing their other traditional favorite destination, which is Thailand. We also see in our surveys that there's very strong demand for Chinese New Year for beach and island destinations and for relaxing tourism, and Thailand is certainly a destination that provides that. I think one of the kind of risks for Thailand, though, is that it has been popular for so long, and so that means that many Chinese tourists have already gone there, and they might be looking for something fresh and new. And I think that's one of the reasons that has helped Vietnam to do so well in the past year, is people looking for that kind of beach island experience, but they've already been to Thailand. So I think that there are a couple of things that Thailand can do looking forward, and one would be looking at new potential markets in China. As Michael showed, there's going to be a huge amount of Chinese consumers who have the money to travel outbound. So maybe looking at markets in like lower tier Chinese cities, developing flight routes to smaller Chinese destinations to get those first time travelers who haven't been anywhere yet and definitely will still want to see Thailand. There's also the potential to develop new destinations in Thailand, as well as new experiences that might be exciting for Chinese travelers who have been to Thailand before. The market now is definitely looking for more kind of unique and special and photo-worthy experiences. I think any kind of destination, Thailand included, that is focusing too much now on the big group tourism market or on shopping as something to drive Chinese tourism, that's very risky, because we can see that both of those things have been declining for a long time. as groups get smaller, travelers tend to travel more independently, and shopping has definitely declined as a priority for Chinese travelers throughout the market, both in the luxury segment and the general travel market.
You explain that incredibly well, Sienna. Especially from the preference or Chinese traveler preference perspective. I think I would just add that, we do have, growth for Chinese visitors to Thailand in our forecast. We are expecting that. So, in the coming few years, and by 2030, we have Thailand being about 35% higher than 2019 in terms of Chinese visitors. It's kind of around the middle of the road in terms of the destinations I showed. So weaker than, say, South Korea, Vietnam, Singapore. And I think part of that is down to the maturity of that bilateral sort of relationship, as Sienna said. So we know from our own surveys that Chinese travelers value new and iconic experiences and destinations more than a lot of other large markets. So something new is very important. So Thailand being a fairly well-established and large kind of destination for Chinese travelers means that, it may be the case that Sienna said that it sees weaker growth because Chinese travelers have already been there. But also, just as a market is larger, as a destination is larger, it's harder to achieve stronger growth. It's just a maturity thing as well. So I would say that we are definitely expecting a pickup, and the strength of that will depend on, I guess, the data that we see in the next few months. But it's, seeing the Lunar New Year, figures that Sienna was sharing, it's already looking promising, compared, based on what was already a fairly low base last year. So I would say, yes, we're definitely expecting improvement for Chinese travel to Thailand. It's just the pace of that will depend on various factors, and as Sienna was saying, it's important to cater to those changing preferences. The days of relying on the large group tours and for shopping and stuff, is those days are, if they're not over completely, then they're certainly falling. So it's important to offer new experiences and new places within a destination.
Great. I wondered if you might want to answer, it might be easy for you to answer the revision of the recovery of the China outbound
Yeah,
market to fully
certainly,
recover,
yes.
just to recap those
Yeah,
reasons
yeah.
again.
Of course. Yeah, yeah. So essentially, look, the main reason why we downgraded is the actual data coming in was weaker than expected. So as of, the data we get on actual Chinese arrivals to different destinations, and we sum those up globally. This we get this data, 3 to 4 months after it's actually happened. That's when it's published, basically. So we were expecting a quicker improvement from 2024 through to 2025 than actually happened. So that would mean now, to see a full recovery in 2026, you would just need to see incredible, or what is probably unrealistic growth. So essentially, we were responding to the actual data we were seeing. So the rebound in Chinese outbound travel overall was weaker than we were originally expecting, which is why we downgraded our forecasts. So we try to be as responsive as possible to actual developments when we produce these forecasts. In terms of why the rebound has been weaker than expected, a few reasons. One of them is the weaker sentiment that I mentioned. So there's more uncertainty in the world. It makes travelers, including those in China, less likely to engage in travel for various reasons. Economically, the Chinese economy is a little bit weaker than what was being expected a couple of years ago. That ultimately affects affordability for travellers. And there's also just some caution in re-engaging in travel as well. So essentially, there's a few different reasons for why the data may have been weaker, and also there was some destination-specific factors, like we've mentioned for Thailand, for the US. Air connectivity and air capacity was also a factor as well. So these are all things that have contributed to, what we believe have contributed to the weaker data that we've seen so far. But the key driver is that weaker data. So we responded to that by downgrading our forecast. If data comes in really strong in the next few months, we will respond accordingly and may upgrade. But like I said, our expectations are probably that we're more likely to downgrade the outlook before we upgrade. But I'm hoping to be proven wrong.
Thanks, Michael. We are at the end of our hour. I'm just going to answer one more question, and then For any other questions, please do feel free to send them in by email, and I can help put you in touch with Michael as well if you have more questions in the future for him. But there was just another question about direct flights to Europe from China. So I just wanted to go back to some of the data I shared from Flightmaster, the flight analysis company, about the Chinese New Year period. For that, flights from China to Europe were actually 26% above pre-pandemic levels. So we can see that flight capacity to Europe has not only been restored, but has been increased. Who's providing those flights is very different than it was pre-pandemic, though. We've seen a big shift in the market from European carriers to Chinese carriers operating those flights, and some of the European carriers, as you probably know, have pulled out of the market altogether or really cut back on their China services, and that is related totally to restrictions on flying over Russian airspace that make the flights for European carriers longer, more expensive, and more difficult to operate. And so the Chinese carriers who can fly over Russia have stepped in there and are much more competitive. And I think, generally speaking, a lot of Chinese travelers might prefer Chinese carriers anyway, because they feel they know those carriers more. They're more comfortable knowing that people will be able to speak Chinese on the flight and things like that. So overall, I think some of the countries in Europe that have seen the strongest growth in air connectivity, Italy is definitely one of them. There's been super strong growth, and Spain has added flight connectivity between China and Spain since the China reopened for international tourism, and that's definitely one of the factors that has driven pretty strong growth to Italy and Spain specifically as countries in Europe. So, Michael, I don't know if you want to answer any more questions. We are over our time now.
I'm happy to leave it at that, and I just
Okay.
wanted to thank you for your answer to that last question. That also reinforced my understanding. So it's it's nice. It's nice. Always nice to hear that.
Excellent. Well, thank you so much for the data you shared today. I think it's very illuminating on many levels, and nice to see we have quite a positive outlook still for growth in the years to come. So yes, a huge thank you to Michael. Many thanks to all of you who joined us today. And on behalf of myself and Dragon Trail International, I'd like to wish everyone a very happy Year of the Horse.